So now we're going to talk about what to do with depreciation on the statement of cash flows. First of all, what section of the statement of cash flows will we find the depreciation expense? So we've already gone over what goes where. I've got a hint for you. Remember, depreciation expense is an expense, so which section contains expenses? That's right. Cash flow from operating activities. Now comes the part that we've not gone over yet. So using our cheat sheet, do we add it or subtract it? Here's our cheat sheet. Depreciation is added. So a lot of students are wondering at this point, why do we add it? Well, we're going to explain that over the next few slides. And to do that, we want to create an income statement. We're going to create one of the world's simplest income statements, one with only 2 transactions. So let's record a couple transactions. First transaction, January 15th, we mowed some lawns for $200 cash. So cash is going up. So that's the debit. And what's the other account? It's a revenue account. This company called it mowing revenue. Revenue is also increasing. So let's do one more transaction. We're going to record 1 month of depreciation on the mowers for $50 at the end of the month. So January 31st. Do you remember what the transaction is for depreciation expense? Depreciation expense increases with the debit. And accumulated depreciation on the mowing equipment goes up. Remember, accumulated depreciation is a contra asset account. All right, these were the company's only 2 transactions. We're trying to keep it simple here. Now, the company's statement of cash flows would show how much of a change in cash for the month if these were the only 2 transactions. Well, that's simple. The only cash transaction on this journal or this journal page was cash going up, $200. So cash flow was positive $200. And since this came from mowing revenue, this would go in the operating section. But we do not create a statement of cash flows by going through all the journal transactions looking for cash. There could be thousands of transactions, maybe hundreds of thousands. So to keep our calculations pretty simple and not so time consuming, the statement of cash flow starts with net income. So let's calculate net income. So we've got Mary's mowing revenue, or excuse me, Mary's mowing service. So we're creating an income statement. We need our revenues. As you can see, our only revenue for the month was mowing revenue, $200. And now we need our expenses. Looking down here at the journal entry, we've only got one expense. That's depreciation expense, $50. So how much was net income? Obviously, 150. I told you this is going to be a simple example. So now, remember when we're creating a statement of cash flows, we need the income statement. Why? Because the statement of cash flows starts with net income. So we do have net income ready to go. So here's our layout for our statement of cash flows. This is for the month ended January 31st. So what's that first section called? Cash flow from operating activities. And what does the operating activities category always start with? Net income. So we're going to take net income from the income statement and plop it over here on the statement of cash flows. Okay, so remember we're doing the indirect method. And why is net income always at the top on the indirect method? That's because the net income will roughly approximate cash flow from operations, as we will see in this example. Revenues were relating to inflows and expenses relate to outflows. So now, if you want to try to memorize all this stuff or just look in your book, what's the next example statement on this? From your example statement of cash flows in your book, what's the next line after the net income? It's called adjustments to reconcile net income to cash provided by operating activities. You don't have to memorize that. That line will already be in there on your homework. So we're going to skip what to do with depreciation expense for now. And we want to calculate net cash provided by operating activities simply by looking at the journal at the bottom of the page. How much cash did the two transactions generate? And was it an increase or decrease? Well, we already figured this out on the previous slide. Cash is going up, it's being debited, so cash is going up by $200, and that's the only transaction here that affected cash. So cash flow was positive $200. So at the bottom of the operating activity section, this is the operating activity section here. We need to show net cash provided by operating activities. Well, we just looking at the journal, since this is such a simple company, we know it's $200. So what must we do with that $50 of depreciation to go from $150 of net income to $200 of cash flow? Remember, depreciation expense is going to go in here, but we have to figure out, are we going to add it or subtract it? So what must we do to depreciation to go from 150 to 200? Well, obviously you have to add 50. We're going to add that depreciation back to net income. So mathematically that makes sense. But you might be wondering, well, why do we have to add depreciation back to net income? It's simple, because depreciation expense lowered our net income, but it did not lower our cash. So we have to back out or remove depreciation from the net income amount. And to back it out, you have to subtract it from the income statement. Excuse me. To back it out, since it was subtracted from the income statement, you have to add it back in. So we're reversing or backing out depreciation. How do you back out an expense? You add it back in. So that is why we have to add depreciation on the statement of cash flow. So let's do a little example. We've got Tiny Tim's towing service. Here is the income statement on the right side of the screen. We've got towing revenue, $900, depreciation expense, $100, for a net income of $800. So we're going to build the statement of cash flows on the right side, the left side of the screen. So we know it starts with net income. So we're going to grab net income from the income statement, plop it over there on the statement of cash flows. And we've got that verbiage we need to put in there. And then we know depreciation expense is going to go in the operating activity section, because the operating activity section includes revenues, expenses, and we have to back out things like depreciation expense, gains and losses. All right, so depreciation expense. Over here on the right side, we've got our income statement. We got depreciation expense of $100. So are we going to add that or subtract that on the statement of cash flows? Well, the previous few slides showed that we need to add it back in. So how much was Tiny Tim's cash flow from operating activities? $900. So this is why we have to start with net income when we're doing our indirect method for the statement of cash flows, because net income is going to be pretty close to the cash from operating activities, and it was. Net income was $800, actual cash flow was $900, so that's very close. It's much easier than going through thousands and thousands of transactions to find all the cash increases and decreases.